Hey, good morning, everybody. Happy Thursday. It's October 30th, 2025. Great to be with all of you today. It's time for our daily bites. Um, I'm still in California. Be here till tomorrow, flying home on Halloween. Hope everybody has had a good week so far. So, as we talked about on Monday, I promised we talk a little bit about the Fed and a little bit about the earnings. Now, of course, the Federal Reserve came in and finished up their meeting yesterday with a policy decision and cut interest rates one more time. They did in September, of course, from 4.25 down to 4, and yesterday they cut the funds rate from 4 to 3.75. Chair Powell said they were moderately restrictive still right now, which still opens the door for a December rate cut, maybe even out to January. But Chair Powell threw some cold water on the market, saying that listen, it's not a foregone conclusion, even if the projections back in September said the economist and Fed people were looking for 2 rate cuts by the end of the year. So again, not a foregone conclusion, and he's got to play things close to the vest right now. We have data because the shutdown is going on. So they really don't have enough information to be able to make a conclusive statement right now about Fed policy in December, right? We're still in October, and we still have lots of days to play out before that next meeting, which is on December 9th. So I think it was a smart move by Chair Powell to dial it back a little bit, and especially the expectations of the market, which we're looking at about a 96% probability of a rate cut just 2 days ago. Now it's down to about 68%. You can see that right here. 68.8% right now, potential for a rate cut in December. So, listen, you know what? That needed to happen, and so we'll see if the rates settle over here. We saw the 2-year yield also pop up. We saw the 10-year yield pop up as well too, in kind with the Fed funds future. So, what does that tell us? That tells us that those longer term bonds, the 2s, the 5s, the 10s, the 20s, we're all pricing in a rate cut. And now they're no longer pricing in that rate cut. So we're going to find where that average rate or that normalized rate is over the coming days and weeks. And if you pay attention to the bond market, then you're going to see some rate stability coming up very, very shortly. So as far as earnings are concerned, look, you know what? Google just hit the cover off the ball last night. That was just an amazing earnings report for Alphabet, Google, and listen, you know what? They've come out firing with AI and their Gemini product, and listen, deservedly so. The stock's up huge, and Microsoft pulled back a little bit. It's just really basically back to where it was before the AI announcement a week or so ago. So not too much damage over there. I think that this one might be worth taking a look at. Meta, on the other hand, is getting hit hard. They did have a large tax bill that they took a hit on their earnings. That's why their earnings were much lower, but the revenue was real strong, and people aren't really paying attention to that. The strong revenue growth, and also some of their initiatives. Their capex number did not go up as many were expecting it to go to 75 billion, and it did go up to capped about 72. So that's these are just little small things, small tweaks and changes that they can make in their next quarterly report coming up in January. So I think this dip in Meta is probably worth a pickup here. And if you're looking for an opportunity to buy and it passed you by a few months ago, then I think this dip is a good chance for you to get involved here. Lilly came out with earnings this morning that were real strong as well too, and they raised guidance. We'll hear from Amazon, Apple tonight, Coinbase, Reddit, Western Digital, Strategy with MicroStrategy. Rocket Company is going to be coming out. We'll also hear from Cloudflare, NET is the symbol there, and Roku. So a lot on tap here. And then we got the oils coming out tomorrow morning along with AbbVie, so and a few other names. So SIBO will also be reporting tomorrow morning as well. So some good stuff there. We don't have a whole lot of data. Again, we do have a couple of Fed speakers today and one tomorrow. So be on the lookout for that. But a lot of people have been talking about the breadth for the last couple of days. Markets were up most of the day yesterday, and the breadth was poor. The markets were up on Tuesday, and the breadth was poor. A lot of people are talking about that. I don't think it's a concern right now, but we do see the oscillators did go into negative territory. You can see it's a minus 69 here and a minus 36. I'm not too sure that that's damaging here yet. I think it's just probably just a little bit of profit taking right now. And listen, you know what, the markets have been up a lot, especially this week, right? And and last week. You've got to understand that people are going to take some profits, are going to take some money off the table, and wait for the next pullback, right? That's normally what happens. But if that pullback doesn't occur, money comes flowing right back into the markets again. Remember, we talked about the wall of worry. Markets tend to climb that wall of worry. We still see the fear and greed index is not at the greed level as of now. So listen, the markets can continue to move higher and frustrate most people who are sitting on the sidelines right now. So I think that there's some good opportunities out here. Remember, tomorrow is the last trading day of the month. It's been a good month of October. And then, of course, Monday will be November 3rd. That'll be the first trading day of November. And, November's, when October's strong, November's not really all that great. But we'll see what happens. Again, everything is news driven. We did hear that President Trump and President Xi in China, from China, also came up with some kind of trade agreements regarding some other items last night. So that was helping to buoy the markets. But as of right now, we're seeing the futures are down. S&P futures down about 25, handles NASDAQ down about 145. They were up a little bit last night. The futures were, but now they're reflecting a little bit of downside. So what I'm going to tell you is what we did yesterday. Keep some puts. We added some puts right before the Fed meeting started, and that was working out for us. We did add a few calls as well too to strangle it, but keep some puts on, raise some cash. We did all that yesterday in the chat room, and get yourself ready for the next move, which could be up, could be down. You don't know, right? But we'll let the market tell us what to do. Have a great day. Have a great weekend, everyone. I'll see you guys all back on Monday morning. Thanks. Trade well, and trade well tomorrow. And if you're in the chat room, I'll see you then. Take care. Bye.